Hello, everyone. As those are just arriving, a welcome to each of you to today's session entitled Your Crash Course in Personal Finance and Tax for Medical Residents. My name is Jonathan Tucker. I'm the Managing Director of Tucker Professional Corporation, and our practice caters to healthcare professionals. And so this is an area that I spend a good amount of my day in. So I hope you'll find today's webinar useful. What we'll be covering, which you'll see on screen as we move to our agenda, are the following questions. And then as we get to the end of our session today, we'll open it up for some Q&A. So if you have questions, please keep them until the end, and I'll be happy to answer the questions that you might have to the best of my knowledge and ability. All right, so you can see on screen what we're going to be covering today. How should I track my expenses? What's the best practice for expense tracking? What's the difference between a tax credit and a deduction? What qualifies as a tuition credit? What qualifies as an expense? Which tax forms need to be completed, and what should I know about fielding CRA inquiries? All right, so we will move on to the first topic on our agenda, which is how should I track my expenses? And this is within the context of being prepared for a possible CRA inquiry or audit in the future, as you will be making claims for various expenses and things like that. Then it's important as a resident to keep track of your expenses and not to wait until the end of the year when you all of a sudden need to pull together expenses to claim on your tax return. So what we suggest you do is to use a credit card as the basis for your bookkeeping system. And I'll explain that a little bit further, but oftentimes I run across medical residents and they have 3 or 4 credit cards. And instead, what I'm trying to get you to do is to use one credit card to capture all of your purchases. Avoid using your line of credit. Sometimes people use their line of credit to pay for things because it seems convenient. It would be better if you could keep all of your purchases on one credit card and avoid using cash, avoid using your bank account if possible, although there will be certain expenses and payments you have to make which can't be made on a credit card, like your CMPA fees. And by the way, as we talk about CMPA, as you're paying for those insurance premiums or membership premiums, which is what it amounts to, don't forget that for those who aren't aware of this, that you can get a portion of that back as a reimbursement. So if you haven't registered with the Ministry of Health for recovery of your CMPA, make a note to do that, because you can get a high percentage of those premiums back if you haven't already applied for that. So back to the idea though of keeping track of expenses, you want to use one credit card to capture all of your expenses where possible. Avoid using cash, avoid using your line of credit. And if you have to, pay by e-transfer for those things, or automatic payment coming out of your bank account for things like CMPA. Oftentimes people say, besides how I pay for things, what do I need to keep? And so you need to keep the receipts themselves. When you use your credit card, you'll get a receipt, or if you purchase something online through Amazon or something like that, you'll get an email with the receipt. You need to keep the receipt itself. It's not sufficient to keep your credit card statement. CRA will not accept a credit card statement as a proof of payment. They want to see the actual receipt itself, which begs the question, so do they need to see a hard copy, or do they accept digital? They accept both. As long as it's legible, CRA will accept it. So make sure, if you're starting your residency or you're partway through your residency, if you hear nothing else today, keep the receipts. They are worth thousands of dollars to you in terms of recovering tax in the future. All right. Now, the other reason that we suggest people use credit cards is because of the data capture that's done by the credit card companies. So often I find medical residents spend time reproducing spreadsheets, entering data into a spreadsheet to come up with their expenses, and duplicating what has already been captured at the point of sale. And so the other reason we use credit cards and one credit card is for ease of tracking, for for efficiency, for time saving. All of the information you need from your purchases as you make it on your credit card is captured as data and can be downloaded. We'll go into that in a few minutes. What's the best practice for expense tracking? Well, for most people, using a spreadsheet is sufficient and is a good system for keeping track of expenses. Now, some people who enjoy keeping track of their personal finances can look at Wave Accounting, which is an online platform, or QuickBooks, which also, or not QuickBooks, but the simpler version called Quicken, which can be used as well. So those are personal finance software packages, just to name a couple. But for those that just want to keep track of what they need to for their tax return, a spreadsheet will be sufficient. I'll go into some detail visually by giving you some screenshots to show you what I mean by these next points. But you want to use a spreadsheet that captures each transaction in a separate row and a cell, and it captures the information like the date, the vendor, the amount, and a comment where it's not evident what that purchase is for. And an example of that would be for Amazon. If you purchase something through Amazon, there's no description as to what that purchase is for. So that's what we're trying to accomplish here. And of course, you're going to keep either a digital version or a hard copy of the receipt itself. And then you'll want to allocate your purchases or your expenses between personal and work related. And then if it's work related, then by expense category. And you definitely want to avoid grouping several transactions into one cell, and I'll show you what I mean by that. And you want to avoid creating too many unnecessary categories or columns. So what do I mean by that? Well, here's an example of a medical resident who was keeping track of their expenses in a way they thought was appropriate. And so on the left column, you can see here, they were keeping track of their expenses, if my wand would work, and it's not. They were keeping track of their expenses by categories in column A, which is not ideal. I understand what they were getting at, but I would set this up differently. We'll give you an example of what I mean by that. And then inside of each cell, then they were capturing several transactions. You can see here $26.48 in the month of January was made up of 3 or 4 transactions. And so if this were an expense that could be claimed and liquor isn't one of them, this person would have no way of going back to track where they spent $12 or $3.48 or $11. This is not a good way of keeping track of your expenses. So what we suggest to people is go with the tried and true, what's already been developed, instead of trying to recreate the wheel here, and you don't need to. What I would suggest that you would look at would be something that is set up in this fashion. Now, that's pretty small to see, so I'll take you into some more detailed or a more magnified version, but this is the way you will want to set up your spreadsheet, or you can ask for this and we'll send this out to you. This is our revenue and expense tracking worksheet. And what we'll do is I'll walk you through a little bit here, if I can get my monitor to work here. There we go. So you can see here, and let me step back for a second. I've mentioned you should use a credit card, and I've told you the reasons to do it, but the big reason, which I mentioned, was around efficiency, is that all of the information used at the point of sale is captured on your credit card. And you can see I've put in some sample transactions here as though this were the download of this person's credit card statements for the month. And you can see that when you download data, and I'll show you from several bank websites how to do it, all the information that's captured, there's the date, there's the vendor, there's the amount, and if necessary, you can put further explanations beside it. So what we want to do here is capture every transaction. You don't want to go through and say, okay, that one I don't need to keep track of, and this one I do need to keep track of. You want to keep everything. So you just simply download from your credit card website the month's transactions and dump them into this expense tracking worksheet. And once you've got the data, which is here, then the next thing you want to do is to then categorize it. I'm having some difficulties with my wand, which is not behaving itself. All right, maybe I can do it again. Yeah, so here's the data. This is what's captured. And then to the right, on this side, is where you then start to categorize those purchases that you've made that are expense related. I'll show you this on a larger image, but that will give you an idea of what we're trying to do so that we can, at a glance, identify by date, identify by vendor, identify by amount, what is an expense to keep track of. And I say that each credit card or each bank website enables you to download this data. And so it's done in a split second. It's very fast. You can see here, here's Bank of Montreal's website. And you can see in here what I've highlighted, which is download account details. And then this will enable you then to further down here and dump all the data from this date range into a spreadsheet. And once you've done that, then that data, which is now in a spreadsheet, can be cut and pasted back into this expense tracking worksheet, as we've done in the top of this screen. This is the captured data. So see how much easier that is than rather to have to reproduce it by re-entering it. Just capture it for your bank website. Here's Scotiabank. And you can see here how, again, the same functionality is provided, and you can simply download the data. Here's the search the transactions, and then you can do a custom search by date, and then simply download that data into the expense tracking worksheet, and you've in an instant captured all of your purchases for the month. Here's TD, same thing here, and you'll notice at the bottom here, you can capture the data. Spreadsheet format is a CSV spreadsheet, and you just download it straight into a worksheet, very fast. And then once you've done that, here's an example, and we'll go through the steps. Now that you've captured that data, in this case, I've said it's been exported from National Bank. That's just an example. Could be any of the banks. And now all that data is captured in this section of the worksheet. And so you've not had to enter in any of this information. Here's all the information. So step one is download the data from the bank website. Step two is now to start to allocate it. And you can see in this example here where the person's gone through and they said, okay, these transactions up here don't have anything to do with the categories that are set up over here. The categories on the right side, CMPA, bank charges, travel, supplies, donations, auto expenses, fuel, auto expenses, repair and maintenance. Those are just some examples of the categories. There's further categories to the right of this, but it will just give you an example. And so for that, for a given month, you would go through and you would identify those expenses that you wanted to keep track of on this spreadsheet. So here there was CMPA, here there was monthly bank charges, and so on. That would give you an example. The third step then is to note that as you continue to process these transactions, you're not to delete category or you're not to delete transactions. Leave them sit there. Even if they don't have any applicability to the expenses that you're seeing on the right side, keep everything. Why do I say that? I say that because this is a new area for you and you might overlook categories or expenses that could be claimed. And you might be saying right now, yeah, but I'm a medical resident. Like, why are you telling me about expenses that I can claim? You're a medical resident, which means you're an employee. And employees are permitted to claim certain expenses. You may not know right now what those expenses are, but if you start deleting expenses off of this worksheet, I won't see them. My staff won't see them. And there may be expenses that get missed. We don't want that to happen. And that's why we say, leave all the transactions on the spreadsheet. Don't delete any. They may contain expenses that you're unaware of, okay? For the months that follow, each, as you go through here, this is 1 month of transactions, December. Now you're gonna go on and you're gonna capture the next month. Now, this is the last month of the year. So you will have done this 11 times beforehand. And by the time you get to December, you will have captured all of the expenses for the year. just by downloading each month's expenses from your credit card and adding rows into this spreadsheet and adding those transactions, okay? So by the time you're done December, because we're on a calendar year basis, you will have captured all of your expense or all of your credit card purchases on this spreadsheet. All right, you'll notice now that once you do this, as you go, that the spreadsheet auto-populates the expense totals. So at the bottom here, this person had $1,387 worth of CMPA expenses throughout the year. And so as you add information into the spreadsheet and allocate these transactions on the right side of the screen, then the totals start to populate themselves. And that's what we'll need when we prepare your taxes. Now, I've given you a process for keeping track of your expenses. This should take you no more than 15 to 20 minutes each month to keep track of. And as I've said, by the end of the year, you'll have a total of all the expenses that can be reported. You won't have missed any expenses. You'll need to do this. Spend 15 to 20 minutes a month. Use one credit card, because remember, for every credit card, double the time. So that's why we want just to use one credit card if possible. And this will save you an immense amount of time and make it much easier when it comes to filing your taxes. All right, so we talked about how you should track your expenses, what the best practice for expense tracking, that's the expense tracking worksheet. Now, let's talk about another area where there's a lot of confusion. The difference between a tax credit and a deduction. And I know you've already filed your tax returns this year, or if you haven't, you should have. You never want to file your tax return late. Don't think to yourself, oh, the government owes me money, so I don't have to file on time. That is creating a profile with CRA of non-compliance. And you don't want to start your career off early with a history of non-compliance with CRA. That is not a good strategy to take. So no matter what it takes, file a tax return on time. And your time, if you're a medical resident, then your payment due date is April 30th, and your filing due date is June 15th. All right, so keep those dates in mind, put them in your calendar, create an auto appointment or an appointment in your calendar each year. Make it on the 15th of April and make it on the 1st of June, so that each year an appointment pops up in your calendar. And on April 15th, balance of tax due April 30th. That's the description of the appointment. And for June 1st, tax return due on June 15th. All right, so those are two practical ways not to miss your filing and your payment due deadlines. All right, now we're going to talk a little bit about what the difference is between a tax credit and a deduction. Oftentimes, I find people say to me, oh, when they file their taxes, residents will say, I don't want to claim my tuition tax credits this year because I think my income is going to go up next year. So I want to use it next year. I want to use my tax credit next year. It doesn't work that way when it comes to tax credits. A tax credit is like a Tim Hortons gift card. An example of a tax credit, for example, is your tuition. So as you pay tuition on the calculation of your federal taxes, not your provincial in most provinces, but on your federal, you will be permitted a tax credit for the tuition that's been paid during the year. And so people will often say, okay, I don't want to claim that. I don't want to claim that tax credit because it'll be, I'll use it next year. And that will be the rationale. But a tax credit is like a Tim Hortons gift card. It's worth the same amount no matter whether you're Bill Gates or Warren Buffett or you're you. No matter your income level, that Tim Hortons gift card or a tax credit has the same value. Doesn't matter what your economic or financial position is. That's not the same with a tax deduction. And each one of you as medical residents will have some expenses which you can deduct against your income. They are tax deductions. What would an example be? Well, cell phone, CMPA, CPSO, those are examples of deductions that can be claimed. Tax credits, basic personal exemption. Your tuition credits, those are the common credits that most people are familiar with, but they're handled differently. So if you're saying to me, I don't want to use my tax credit this year because I want to use it next year, that's not right. You're not thinking about how a tax credit, or you're not aware of how a tax credit works. A tax credit doesn't get pushed off to the future. The Income Tax Act actually has it claimed in the year that it is incurred in most cases. Some can be carried forward. Tuition or interest on student loans would be another example of a tax credit. But a tax deduction, like I suggested, cell phone, CMPA, CPSO, those types of expenses that can be claimed, in some cases can be pushed off to the future. So let me, with this next slide, give you an example or teach you how we are taxed. You and I are all taxed in this fashion. And so you can see on this slide that this axis, your x-axis, is your taxable income. And everybody's treated this way. So this is an important consideration. And this is an important slide to keep in mind because it will give you an idea of how you are taxed. So on the x-axis, we have taxable income. On the y-axis, we have income tax expressed as a percentage. In Ontario, once your income exceeds $220,000, it's taxed at 53.53%. So if you're a medical resident, you're in this neighborhood right now in terms of income, depending on what year you're in. If you're PGY1 or you're PGY 5 or 6, your income will be a little bit higher. But what you can see then is your tax rates are very low. So if you're wanting to optimize the value of a deduction, not a tax credit, a deduction. If you want to optimize that, and if it's permitted, then where permitted, where you have deductions that are discretionary, then you can push those off into the future when your income is taxed at a higher rate. So I'm always wanting clients who are in their last year of residency to push off the expenses they're permitted to push off into the future year. It might sound strange, but I would rather you pay more tax in your years of residency and defer claiming certain expenses so that those expenses in the future will have the value of the tax rate that you're at in the future. I'll give you an example. Maybe some of you are thinking about contributing to your RSP. Maybe you want to buy a home and you want to take advantage of the first-time home buyer plan, and so you can contribute, provided you've got the room, you can contribute $35,000 into your RRSP. If you contribute $35,000 in, then you can turn around and take that money out, provided you meet certain criteria, and use the money towards the purchase of a home. But not only that, but the $35,000 contributed, that contribution can be claimed as a deduction to drive down your income tax, and as a result, reduce the amount of income tax. So a person has a $35,000 RSP contribution. They're 2 years away from finishing their residency, and their income is somewhere in this neighborhood here. I would be saying to that person, don't claim that $35,000 RRSP contribution because the tax rate you're at is somewhere around 20% at your current income level. Wait until you get into practice, you get your independent medical license, and when your income is over $220,000, then we'll claim that $35,000 contribution. Why? Because the $35,000 contribution will result in roughly a $17,500, actually it's a little bit more, closer to $18,000 reduction in your income tax than the same $35,000 which is taxed at 20%. So you can see there that $18,000 in comparison to what you would get if you're taxed at 20% on $35,000, that same contribution, if it were deducted when your income was at $65,000 or taxed at 20%, will be significantly lower. It would be $7,000 would be the value of that against the income tax you're paying, as opposed to it being $18,000 once your income is over $220,000. You see what I mean? So I would rather you pay more income tax as a result and not claim that contribution when your income is lower, and defer claiming that until your income is taxed at a much higher rate. Does that make sense? So everybody, every individual is taxed in this fashion. The more you earn, the higher you pay in tax. It flatlines at $220,000, and at that point in Ontario, you're taxed at 53.53% at that point. All right, we'll continue moving on here. Here are some of the most common tax credits for residents. There, I mentioned it already, interest paid on your student loans. I'm not talking about your line of credit here, although if you're careful and you track your expenses carefully, we could even get at some of that, but not as a tax credit. It would be as a deduction. And then, of course, there's your Canada training credit. And then, as I mentioned earlier, there's your tuition, education, and textbook amounts, which includes not only your university tuition, but as a medical resident, your university tuition, once you're a resident, drops down to between $350 and $700 a year. So it's much lower, but also the professional entrance exams. So these exams that are written for professional purposes for licensing also constitute tuition, as well as ancillary costs. So you might have costs for transcriptions or verifying qualifications. If you're an IMG, then there's ancillary costs up to a certain limit that can be claimed as tuition expenses, all under the tuition, education, and textbook amounts. So if you've got expenses like those items, they all fall into the bucket of tuition. It doesn't just have to be university tuition. All right, so what qualifies as an expense? I use this example because so often people say to me, so what can I claim as an expense? And I've given you some examples in this slide. There's self-employed expenses, professional expenses, so CPSO, CMPA, OMA, and employment expenses, that's actually a narrower category of expenses. And so I've said it depends on what your filing position is, whether or not you can claim certain expenses or not. So, but here's how I would like you to think of expenses. I oftentimes say to people, define an expense for me. What is it? And they will say, well, it's something I spend money on. And that's true, fair enough. But with respect to, let's be more precise than just saying it's something I spend money on. Because an expense, and this is the way you'll want to start to think about this, because you're now starting to incur expenses towards your practice. An expense is anything incurred in the course of earning your income as a physician. An expense is anything, any purchase you make that is incurred in connection with earning your expenses. So when we go back to that expense spreadsheet that we had a few slides ago, I want you to keep track of that definition and say, here's what an expense is. As you're going through this expense spreadsheet, trying to figure out what goes into these columns on this side here, remember the definition. An expense is any purchase made or incurred in the course of earning your income. It doesn't have to be income earned this year. It could be income earned in the future. So I want you to keep track of receipts for that stethoscope or that reflex hammer, or expenses incurred in the course of driving from one location to another during the course of the day, or keep track of your CMPA and CPSO dues, all of those things. And please keep the receipts. Get used to keeping the receipts. What do I do every month? I just take all of my receipts. I keep receipts for everything. If I go and buy an ice cream, I keep a receipt for it. I pay for it on my credit card, so I get points. I pay for it on my credit card so I can track my spending. So as soon as I keep track of those, it goes into my system. My credit card is part of my system of keeping track of expenses. And so that's what I'd like you to do. But buying that ice cream doesn't have anything to do with me earning income from the practice of accounting, or in your case, in the practice of medicine. But money spent on electives does. So again, keep track of those expenses, keep track of those receipts. Your job, as I say in this slide here, is to take that principle that I've just given you to keep track of the expenses you're incurring, which have some connection with your income as a physician, whether it's now or in the future. My job is to optimize the value of those costs incurred in the course of your training, whether it's claiming it now or claiming it later. All right, that's all I want to say to you about expenses. Now, let's talk about one of the larger expenses that you'll have. You're not like a manufacturing company, which has a lot of different expenses that can be claimed, employees and purchases of materials and things like that. You don't have many expenses. So the expenses you have, we want to make sure we keep track of. And not only that, one of the larger ones are motor vehicle expenses. And so what I suggest to my resident clients is get in the habit of putting, if you're not going to use an app, and there are a few apps, the one that I have is called MileIQ, although there are some other apps as well that are similar, but those apps sit on your phone, and as long as you have data, it will keep track of your trips. All you need to do is swipe left or swipe right to denote that trip either as practice related. As a resident, it could be practice related or as personal. The expenses, though, that can be claimed with respect to your vehicle include gas, repairs and maintenance, insurance, parking, a portion of the purchase price of the vehicle, lease expenses, interest on a car loan. All of those are expenses that can be claimed with respect to your employment or as you get into practice as part of your professional income. Now, a word about the trips themselves. How do we calculate the expense? Well, I told you the expenses are gas, repairs and maintenance, lease expenses, insurance, vehicle registration, a portion of the purchase price of the vehicle, but we can't claim all of those because you use your vehicle both for work as well as for pleasure. And so we have to find some way of allocating those costs so that we can claim what's permitted for income tax purposes, while at the same time not claiming the personal portion of those expenses. And that's where keeping track of the kilometers becomes so essential. CRA will not accept your claim for auto expense if they audit you if you don't have a vehicle log. You must maintain a vehicle log. Now, they don't tell you what the log needs to look like. They'll tell you what information needs to be captured. But I say to people, don't try to recreate the wheel. There are apps to keep track of your vehicle usage. Use them. One of them I suggested here is MileIQ. If you're going to keep track of it manually, make sure that you put an entry in your calendar, a recurring entry, a recurring appointment every year on the 2nd of January to note the kilometers on your vehicle. You do the same thing if you change vehicles partway through the year. When you got rid of that old vehicle and you got a new one, make sure you write down the kilometers on the old vehicle so that we have a tracking of the kilometers driven during the year. All right, so you can maintain it manually. I'd really encourage you to look at an app like MileIQ to keep track of that for you. It will then format a vehicle log for you. It will export a vehicle log in the format that CRA requires in the case of an audit. Get in the habit of using these tools. They will save you time and they will save you money in the future. Now, how do we know which trips are work-related and which trips are personal? Well, as a medical resident, the trips to and from the hospital, the first trip of the day and the last trip of the day as a medical resident is considered to be personal. You can't claim those trips as part of your employment expenses. But if during the course of the day you move from one facility to another, those can be treated as work-related or business or employment-related trips. So if during the course of the year you drive 12,000 kilometers, and if the number of kilometers driven between facilities during the course of the day, or if you get called in on home call, if you get called into the hospital, that would be another example of a practice or employment related trip. then those kilometers can be used in determining the percentage of expenses that can be claimed. So back to my example, you drive 12,000 kilometers in total for the year. And of those 12,000 kilometers, 6,000 of them have to do with trips to and from the hospital, or sorry, to and from one facility to another during the course of the day. And it totals 6,000, then 6/12 or 50% represents the percentage of expenses that can be claimed of your vehicle. That's not a small amount. It's worth keeping track of. And as I say, motor vehicle expenses happen to be one of the larger expenses you're likely going to incur as a physician. Get in the habit of having the systems in place to keep track of that so that you can maximize that deduction. All right, so how are we doing here? We've gone through how I should track my expenses, what the best practice for expense tracking is, the expense tracking worksheet. We've talked about the difference between a tax deduction or tax credit and a deduction. We've talked about what qualifies as a tuition credit, what qualifies as an expense. Now we're going to get into the forms, which if you're new as a resident, you are going to be given these forms. And so let's just walk through them. The first one is called a TD1 form. You've probably already been asked to complete this. It's completed at least annually. And the purpose of this form is to give direction to your employer, which is the hospital, to tell them how much you have in the way of tax credits and whether or not they should reduce the amount of income tax taken off of your paycheck. That's the purpose of this form. And the section or the box that particularly deals with this is box 5, which asks the question, tuition, if you are a student enrolled at a university or college or an educational institution certified by Employment and Social Development Canada, and you pay more than $100 per institution in tuition fees, fill in this section. Now, what they're asking you for here is not the carry forward amount of all of the unclaimed tuition credits from prior years. That could be $100, $130, $150,000, depending on where you went to school. That is not what they're asking for here. They're asking that you fill in the amount of tuition that you expect to pay this year for your tuition. That's this year, 2022. That's like the $700 that the university charges you to maintain your student status. That includes the exams that you are going to write this year, but it doesn't include the $130,000 carried forward. So often this form is filled out incorrectly. This is just this year's expense. All right, that's the TD1 form. The other thing I'll mention about this too is that it's usually filled out initially when you start as a resident, but it should be updated as your circumstances change. So let's think of it this way. You start out as a PGY1, you earn $65,000 a year, you've got $130,000 of tuition carry forward. It's likely that you're going to use up half of that $130,000 in year one, PGY1. Well, actually, that's not true because your first year, you'll be employed from July to December. And so if you're earning $65,000 or $70,000, then you're going for the year, then the PGY 1 year from July to December will mean you'll earn about $35,000. And so you'll use up $35,000 of that $130,000 of tuition. The reason I'm saying keep track of that is because if you're in a longer subspecialty program, 5 or 6 years, you will have blown through your tuition credits in year 2 or year 3 or 4. And if you've told your employer because you've answered box 5, or if you've carried your tuition credits forward, you will have used them up. And so it will be important in those years to amend this with your employer and tell them to stop with or to start withholding income tax because you've used up your tax credit. Unless, of course, you want to wait until April 30th and then have a large check that possibly because you've now got income that is subject to tax and no longer do you have tuition credits to use. So keep that in mind. This isn't just filled in when you start your residency. It should be completed as your circumstances change. Now, we talked about box 5 on that, which has to do with tuition. Now, if you want to reduce the amount of tax withheld at source, your employer doesn't have the legal right to do that. What CRA requires you to do in order for your taxes to be reduced in acknowledgement of the tuition credits is to complete this form. It's called a T1213 form, or a request to reduce tax deductions at source. And it has to be submitted to CRA. We do, if you need a hand on these, we complete these for clients. And it's basically submitted each year, in which case then it says to the government, here's my notice of assessment from last year. You acknowledge that I have $130,000 of tuition credits. Please confirm that my employer can reduce the amount of income tax withheld from my paycheck, so that you can then take the tax savings that's no longer held from your paycheck each month, and you can use that extra money because now your paycheck's gone up because there's no tax withheld at source. You can use that extra money to pay down your line of credit sooner, for example, or if you're buying a house, you can have access to that extra cash sooner. That's one use for this form, this T1213 form. You want to get on this quickly because it does take some time for CRA to process this. And so we sometimes do this for a couple of years, just to let them know so that we don't have to go back next January and wait a couple of months for them to process this and provide their permission. All right. The next form you're going to run across is called a T2200 form, Declaration of Conditions of Employment. And this is already completed for every resident by the employer. It's a 2-page form, and in it, it explains to the government what the employee, you, the resident, the employee, is permitted to claim. And so this form, if you notice on question 7 of this form, says, did you require this employee to pay other expenses for which they did not receive any allowance? If yes, what are they? And what your employer will have completed, they'll tick the box here to say, yes, there are expenses that you were required to pay. And in here, they'll put in things like CMPA, CPSO, travel, cell phone, those types of expenses that you're having to incur that you're not reimbursed for. So this form is provided each year. It's necessary in order, if you're audited, in order for CRA to approve the expenses you've claimed, you must have this form. If you're not sure where to find it, log into your university portal or your employment portal and look for it, or if not, contact your program director or talk to a colleague or two that might be a year or so ahead of you who will have already known where to download this. All right, as we wrap up here, the question is, as we've talked through this content today, people will be saying, shoot, I didn't know I could claim this, or I didn't know I could claim that, and I filed my taxes in the past. So what do I do? Can I fix that? Can I change what I filed in the past? And the answer is yes, you absolutely can. You need to file a T1 adjustment for the year in question and provide CRA with the supporting documentation. Again, we do this all the time for clients because things come to light that they weren't aware of. In fact, you can see there, with more than 90% of the medical residents we work, we end up filing a T1 adjustment for expenses that have not been complied, or for expenses that haven't been claimed in the past. And that's why it's such a staggeringly high amount, because most people think, and I often hear this, oh, my taxes are simple, I don't need to worry about this. My dad or my mom takes care of these, or my parents' accountant takes care of this. And they may not have any notion of what expenses you're incurring if you don't draw it to their attention. And even then, there might be things that get missed. So I just make you aware of the fact that these things can be amended if necessary, because things do get overlooked. The last point has to do with what happens if CRA or somebody who says they're from CRA contacts you. It happens all the time. There are scams out there, phone calls or emails asking you for your social insurance number, threatening that if you don't respond by a certain time, you'll be arrested. Those are all scams. But CRA does call taxpayers. They still do use the phone. And so you want to make sure that you just don't blow off these calls, because you don't know, it could be the real thing. I can tell you, CRA will never ask you for your social insurance number over the phone, a credit card number, or request immediate payment. They will never do that. So if you get somebody who's saying they're from CRA and they're asking you for that, it's bogus. But if you do get a call, then I'd suggest that how you respond to them is as follows. Tell them that you are not familiar with this area, that you have an accountant, and so therefore could you have your accountant contact them. In other words, get me involved, or if you're working with another firm, get them involved so that they know how to answer CRA's questions. CRA, oftentimes, they're great people doing their job as they ought to, but they will ask questions that you may not know the answers to. And so as a result of that, you may say things that you wish you hadn't said had you known the significance of the question at the time. And so be careful what you say. If possible, direct them to your accountant and have your accountant talk to them. The second thing is, if you get correspondence from CRA, send the correspondence you receive to your accountant. Don't email it, because if you email it, it'll oftentimes have your social insurance number or confidential information. You should be uploading it to a client portal, which is secure, so that then we can take a look at it and see what is being requested. And as I've said there, avoid sending time-sensitive or sensitive information via email because it's not secure. So that's how to respond to CRA, but you don't want to ignore them because you think it's a scam, because they could actually be trying to reach you. If that's the case, just say to them, listen, as I say, I have an accountant. Can I please have my accountant give you a call? And they will provide you with answers to your questions. That would be my suggestion with respect to fielding CRA inquiries. All right, we've covered our slides. Do you have any remaining questions? Mustafa is moderating, so if there are questions, please feel free to ask them now, and there are no dumb questions, so don't hesitate.
No questions so far, Jonathan.
No questions? All right. We do provide, on a limited number basis, complimentary tax support services for residents and fellows. So if you're working through your residency or you're a fellow, we do, for a limited number of clients, it comes on a first come, first serve basis. We do tax returns, Canadian tax returns, at no charge during the course of the year. So keep that in mind if you or you have colleagues that need assistance with this. So please feel free to use the contact information on the screen to get in touch with me for next steps on that. And if there's any questions you have in terms of what we covered today, please don't hesitate to send an email, and I'll do my best to get back to you and provide you with some direction or some advice with respect to those questions. I think that's all I want to say about that. We have some upcoming webinars, which you can see here. Next steps for those finishing their residency, which is in September. 5 ways, and some of these topics may not be at the stage you're at in your career. So 5 ways of taking money out of your corporation deals with content around people that are practicing medicine through a professional corporation. What you might want to consider, though, is the December one upcoming, which is the pros and cons of RRSPs. If you're wondering what part RRSPs play in your financial planning and in tax planning, that topic is of particular interest. If you need more information on different topics, then log on to our website and go to our videos, which have our past recordings of webinars like this there. So it's available for you to take advantage of as well. If you have any colleagues that you think might find the content of today's video, which is recorded, or any other topics upcoming, please feel free to distribute this information to them as well. This is our way of trying to provide information to people early on in their career. The last thing you want to do is to try to go back, and I have this dozens and dozens of times where people have not kept track of things, didn't know that they could claim things, and we have to go back 4 or 5 years and try to find the receipt for that reflex hammer. or that stethoscope, or that computer that they purchased during medical school, or the cost of the electives or their CARMS interviews, all of those things, because nobody told them to keep track of the expenses. So really important. Thank you so much for your time today. I hope this has been of use, and we look forward to seeing you inside of our next upcoming webinars. Take care, everyone.